closing the transaction. Uh, as part of closing the transaction, conveyance is an important aspect. So, to conveyance is broadly defined as a creation of transfer documents and associated transfer of rights and interests from one party to another. Conveyance is not limited strictly to the transfer of ownership, but extends to any interest of right or right ranging from a freehold estate to assignment or or limitations on use. For registrant, a conveyance typically involves transferring of freehold, leasehold, or fractional interest in real estate. Title conveyance for freehold properties is accompanied through a transfer deed of land. The document is registered in either registry or land titles. Ontario is currently undergoing a massive conversion from manual to electronic system, along with conversion of registry to land titles. Electronic registration provides all functionality contained within the manual counterpart, but with the added advantage of electronic creation, submission, and storage of documents. So, as part of closing process, um, investigative process by which parties through legal counsel carry out conveyance requirements and satisfy terms and conditions set out in the agreement of purchase and sale. With manual registration, the process culminates in the exchange of documents in front of the land registry office, but now with e-registration, all of this can be done online. From a buyer's closing process from a buyer's perspective is involves the title search, non-title search, requisition to seller's solicitor, and the actual closing, and then final or reporting letter. The the first thing from a buyer's perspective is the title search. A title search of the purchased property is necessary to ensure good and a marketable title. In registry, a 40-year search is completed to examine the chain of title together with any gap or error in the chain, traditionally referred to as the cloud on title. In land titles, the search is restricted to the current entry for the particular property parcel. The solicitor is looking for items such as outstanding encumbrances, restricted covenants, non-resident parties, expropriation, and matrimonial home status. He or she will also investigate adjoining lands to ensure compliance with the Planning Act. The date of the search is recorded in anticipation of a sub-search at the point of closing. The solicitor will report to the client on title, conditions, and other matters significant onto a title. The buyer solicitor also searches non-title records that can affect the property title. Non-title searches. The buyer solicitor will search various non-title records like zoning, work order, execution, unregistered easement like hydro easement, personal property pursuant to registration system established under Personal Property Security Act, outstanding amount relating to local utility company, status of real property taxes, including any special assessment or local assessment and surcharges, survey documentation, compliance with subdivision or site plan agreement, and status concerning Ontario New Home Warranty Program. So the closing process involves title search, includes a non-title search, and then followed by requisition date or requisition. The ORIA form 100 provides that for a specified date or requisition date to complete the searches, the buyer may examine the title of the property at his own expense until a stipulated requisition date or and and the earlier of 30 days from the later of the requisition date or the data on which the condition of the agreement are fulfilled, otherwise wait of 5 days prior to the completion to ensure that no outstanding work order or deficiency exists affecting the property, to verify that the property is insurable, and to confirm the present use is legal. Following searches, a requisition letter or a similar document is transmitted to the seller solicitor regarding any problems, defects, or general matters affecting title. Requisition can be wide-ranging, like evidence that the seller is non-resident, is not. Requisitions can be wide-ranging: evidence that the seller is not a non-resident, declaration that the seller has occupied the premises, the seller undertaking to pay all tax levies, charges and penalties prior to closing, and provision or satisfactory evidence that all building have been built in accordance with the municipal bylaws and provincial statutes. Upon successful resolution of matters requisition, the sale progresses on the scheduled closing. A final reporting letter is prepared following closing, setting out transaction particulars from buyer's perspective, statement of adjustment, opinion regarding title adjustment and mortgage details. Seller's perspective. From a seller perspective, um, the the seller solicitor completes the draft deed, prepares other documentation, resolves issues, and performs other tasks that arise as a consequence of the requisition. Response to requisitions, the seller's lawyers will respond to the requisition from the buyer solicitor, provided that such are consistent with the agreement of purchase and sale and within the time limits specified. Requisition item may contain statutory declaration concerning not being a non-resident, declaration of possession covering the seller's period of ownership, direction for payment of funds on closing, sellers undertaking to pay tax levies, charges, penalties, utility accounts, and provide vacant possession, evidence of no execution, no contravention of Planning Act, and no unregistered lien, right of way, tax areas, expropriation, and construction liens, discharge of any lien, mortgage, encumbrance other than those assumed by the buyer, compliance of buildings and other improvements with zoning bylaws, a statement certifying that the sale of land and premises is exempt from harmonized sales tax, and other or otherwise depending on the circumstance. Undertaking. Undertaking may be necessary to resolve last minute issues arising at closing and can be grouped under client. Assurance by the client typically given through the lawyer. Um, the lawyer will diligently take the necessary steps to ensure specific assurances are carried out and the personal. So essentially, the undertaking are the are the assurances given by the client and our solicitor regarding the unresolved items at the closing of a real estate transactions. So the undertaking can be broadly grouped under three categories. Clients, where the assurance is given by the client, typically through the lawyer. Best effort, the lawyer will generally take necessary steps to ensure that the specific assurances are carried out, and the personal assurance by the solicitor that something will be done. Undertaking can involve issues such as unanswered requisition concerning outstanding liens, encumbrances, or encroachment, evidence that no tax areas exist concerning the property, and that all chattels remaining with the property are not encumbered. Another frequently encountered undertaking involves assurance that the existing financing will be discharged following closing. Statement of adjustment. The lawyer prepares a statement of adjustment itemizing the financial history of the transaction. The statement sets out the balance sheet form, all credit to the seller, all credit to the buyer, and the balance due on closing. The statement of adjustment provides all parties to a transaction with a financial breakdown as of the closing date. Adjustments as involve those items requiring appropriation as of date of closing. Such adjustments for the purpose of for residential transaction includes rent, mortgage interest, realty tax, local improvement rates, unmetered public or private utility charges, and unmetered or non-metered cost of fuel. Adjustments are appropriate and allowed to the day of completion itself, to be charged onto the buyer. As the remainder insurance is not prorate, the buyer must secure his or own insurance coverage. Final reporting. The seller solicitor reviews all draft documents provided by the buyer lawyers to ensure compliance with the terms of the agreement and discusses any item requiring clarification and or resolution with the buyer solicitor. He or she also prepares a final reporting letter following closing, setting out transaction particulars from the seller perspective. Typical residential disbursements. Salesperson should generally be aware of typical disbursement involving a residential transaction, and illustrations provided on the following page for identifying the typical fees and disbursements. So in case the buyer's fee will be like survey, title insurance, mortgage financing, land transfer tax, legal fees, like city certificates, zoning report, engineering reports, and adjustment for municipal taxes and applicable taxes. E-registration. The traditional system of registration at closing, now largely relegated to the historical fact, involves manual submission of prescribed forms over the registration counter at the land registry office. The provincial government recognized inherent weakness and ever expanding need for concerned land registration began the process of electronic registration. Registered records to both to appreciate the type of procedure in real estate closing as well as the benefit for listing, marketing, and appraisal functions. So, as a part of e-registration, which is highlighted here, there are two important systems: Polaris Terranet, and there is a TerraView access as well. So, Polaris or Terranet is electronic access conversion. Um, for the electronic access. So electronic conversion is primarily driven by two systems, Polaris and TerraView. Polaris is acronym for Province of Ontario Land Registration and Information Systems. Is an automated land registration system based on title index and property mapping database. The province-wide conversion, now largely completed, involves lengthy reorganization of documents and data under individual parcels with a unique identifier referring to as property identification number. Terranet is responsible for enhancement to Polaris as well as providing electronic gateway view called as the TerraView. The process of electronic conversion is complemented by the line title conversion project, in which records are now not only automated but also moved from Columbus registry system to the land title system. Under the TerraView access, the TerraView users must be registered with Terranet. Each user must have a removable computer storage device with individual security credentials. The user creates a unique password and establishes an account for access charges and other disbursements like land transfer tax can be electronically calculated, directed at closing, and forwarded to the Ministry of Finance. Terranet requires that the sufficient balance remains in the user's account at all time to handle charges and disbursements. Title insurance. From a lawyer's perspective, TerraView operates on four levels: search, create or update, complete or approve, and release or registration. Search allows the lawyers to view the document registered under Polaris. Create or update allows the lawyer to create a view and authorize document for registration, like transfer, mortgage, or mortgage discharges. System contains data entry fields that parallel information required in the manual system. Complete or approved, the lawyer confirms that the documents are acceptable for registration by means of electronic complete signatures. Release or registration, the lawyer then provides a released electronic signature and documents are released for registration. Both complete and release signatures must occur during the acceptance of land registration office. Uh, TerraView provides various levels of security that may be assigned to the lawyer to that may be assigned by the lawyer to the others, like legal assistant or conveyor. Title insurance. Title insurance is originating in the U.S. given the deficiencies in the local and regional land registration system. However, its ultimate real growth came as a result of mortgage, not the real estate transaction. In the mid 1900s, national loan programs were developed to fund the expanding U.S. residential marketplace, which in which the major players were for the Fannie Mae. To assist small banks, Fannie Mae would purchase mortgage arranged within the local marketplace. Lenders could then more aggressively pursue residential mortgages, use Fannie Mae as a reliable purchase vehicle for such businesses and expand home ownership throughout the country. To ensure marketability, Fannie may require title insurance for purchase mortgages to protect the mortgagee interest against the title defects regarding the underlying property security. Ultimately, by standardizing this approach throughout the United States, the secondary mortgage market now flourishes where mortgage portfolios are bought and sold. Title insurance in Ontario is relatively new but expanding rapidly. During the past decade, the secondary mortgage market has grown dramatically due to lender policy in similar fashion to the US. Extensive consumer marketing has now led to a wide acceptance of owner policies as well. The owner policy is patterned after its loan policy counterpart, but with a narrower title coverage range, given the higher risk associated with the owner policies. With loan policies, protection is limited only to the mortgagee interest. With owner policy, title coverage encompasses the entire property value, including the owner equity. So again, there's a loan policy which protects the lender's interest only, and there's a owner policy which is patterned after loan policy counterpart, but covers with narrower title coverage range, but it covers the entire property itself, mortgage plus equity. Whereas the loan policy only covers the lender interest. Under the owner policy, there is the title. So two primary coverages are provided duty to. So under the owner policy, there are two aspects: that the title coverage encompasses the entire property value, including the owner's equity, and there's a greater success because of consumer acceptance, straightforward claim procedure, scope of coverage, title defects coverage, minor encroachment, etc., existing surveys, and there is no need for an existing to create an existing new survey. And they also like value-added services. Title insurance policy also receive a boost from the real estate community. Residents view such policies as a value-added, consumer-friendly, and positive force in the closing process, as problems to delay can often be avoided. Given such popularity, insurers are now bundling other products and closing services while streamlining procedures to align with the new e-registration system. Policy coverages. The two primary coverages are provided: duty to indemnify actual loss and duty to defend. Duty to indemnify it takes care of the actual loss incurred, and duty to defend is the legal expenses associated with the claim. The resident should avoid discussion any matters relating to the title coverage and refer clients to the legal counsel. No standardized policy wording currently exists, and the extent of coverage along with the exclusion must be carefully analyzed. The structure and form of title policies, whether for lender or the owner, are more or less standardized, keeping in mind that separate policies are targeted to commercial and residential properties. Commercial policies follow one of the several uh, commercial follow one of several more or less standard wordings. In case of residential, basic policy wording have given ways to various extended policy coverages, making direct comparison more complex. Typical risks covered under the title insurance would be um, a document relating to a title is not properly signed, otherwise defective. The document was defectively registered on the title. Some form of forgery or fraud in document affect the title to the property. The inability to access the property is uncovered. The legal right for pedestrian or vehicular access. The title is unmarkable for a number of reasons that results in the person refusing to perform a contract, lease, or making loan. Contravention of a municipal bylaw occurs. The owner is forced to remove or otherwise remedy a structure due to the violation of zoning bylaws. A contravention of a division or development agreement or other agreement relating to the development of property. Construction liens are discovered on the title that have not been previously agreed to be paid. Individuals claim right over the property not identified in the title documentation arising from lease, contract, options, or some other possessory right. A lien on title is discovered that may have a priority arising from a judgment, mortgage, or public utility account. Certain restrictive covenants may exist that affect the use of land, someone else owns the interest in the title. Detailed detailed view of any specific policy is required along with expert advice, listings and selling benefits. Traditionally, buyers relied on lawyers' letter of opinion, but if the problem arises, then the buyer has to prove the lawyer's failure. Title insurance provides a means to not only address qualification within the reporting letter, but also protect against various errors that could have been potentially occur through fraudulent activity or simply error made in the document prepared by others. Lenders, in particular, take a great comfort in the value of title insurance to address issues that might be missed despite the diligent effort of the solicitor. Once again, the prudence is advised, as title policies do not solve all the issues given exclusions, conditions, and stipulations affecting the scope of coverage. The benefit of title insurance can be summarized as into need for non-new surveys. Title problems at the listing by sellers can also be avoided, like for example the duck extending beyond the approved setback. Marketing initiative, the sellers may agree to purchase title insurance as an incentive in marketing of his or property. The seller commitment translates into cost savings at the point of negotiation with a potential buyer. Title problem at closing. Title policies have proven particularly effective in ensuring over certain title problems that crop up at or near closing. As an example, a minor encroachment may exist that could otherwise detail or cancel a sale. Alternatively, a minor issue regarding final inspection of an addition or improvement to the property may not have been completed by the municipality. The title insurer, after the investigation of the risks involved, may elect to insure other problems, allowing the transaction to close on time. Legal disclosure requirements. The Law Society of Upper Canada sets out various disclosure requirements for lawyers considering title insurance pursuant to the rule of professional conduct. Disbursing commission. Real estate brokerage must receive written notification from the solicitor of the transaction. For disbursing commission, the real estate brokerage must receive written notification from the solicitor that the transaction has closed prior to fund disbursement. The notification of completion of sale is provided for this purpose. Typically, a direction is signed by the seller authorizing the seller solicitor to forward commission, assuming that the total commission equals the deposit held in the statutory real estate account. When the sale closes, a check is issued from the real estate trust account payable to the commission trust account. If surplus exists, then this amount is paid to the appropriate party, typically the seller. Commission earned in one of the six possible disbursement from the real estate trust account. Commission trust account. This account is used solely for the receipt and disbursement of commission funds and is kept separate apart from kept separate and apart from the statutory real estate trust account. That this trust arrangement provides a greater protection in the event of brokerage bankruptcy or misappropriation of funds. Insurance provision. A further consideration involves the provision from the mandatory RECO insurance program with specific reference to commission protection coverage under the policy. If the broker did not set up a commission trust account, salesperson can still be employed by the brokerage. However, they may not be able to make a claim for commission under the RECO insurance program. So if a loss is incurred by the brokerage and the salesperson knew that no commission trust was established or did not use his or her best effort to determine that the brokerage has set up and maintained a commission trust account, salespersons are very well advised to include reference in this requirement within their employment contract. Organized real estate. Commission trust plan developed by the Ontario Real Estate Association has been adopted by most real estate boards in the province. This plan ensures that the brokerage commissions are held in in the trust account and are protected should the member of a firm become insolvent or bankrupt. The commission trust plan is not mandated by legislation and should not be confused with the statutory real estate trust account required pursuant to the Real Estate and Business Broker Act 2002. The plan provides for a separate commission trust ledger to account for all deposits and disbursement from the commission trust account to ensure that the trust relationship is maintained when disbursing funds to salesperson. A separate trust arrangement must be established between the brokerage and the salesperson. Four-step procedure: brokerage adopts and enforces a section in the brokerage office policy manual that specifically sets out the commission trust concept. Brokerage includes a clause in the employment agreement that reinforces that the commission trust concept as set out in the office policy manual. The commission trust range agreement is entered between the employer and the employee for each and every transaction, either by the way of separate form or in a section added to the trade record sheet. The commission trust agreement is entered into between the listing and the cooperative brokerage for each transaction. All audio agreement of purchase and sale provide for a commission trust agreement following acknowledgement. The pre-printed wordings include space for signatures of listing and cooperative brokerages or their duly authorized representatives. The clause states that the listing brokerage in consideration of the cooperating brokerage brokering the agreement declares that all monies received or payable in connection with the transaction shall be held in trust and shall constitute a commission trust account. This commission trust account is defined in the MLS rules. It's subject to and is governed by MLS rules representing the commission trust account. Closing the trade file. So after the commission disbursement happen, the trade file can be closed. The brokerage updates the trade record sheet notifying disbursement of the statutory trust, including the fund transfer to the commission trust account. Appropriate notations are made on the sale file, which is then transferred for pending sales to close. Typically, closed sales are filed in trade number order, but archiving procedures can vary by brokerages. After closing, a real estate carrier requires discipline and commitment that extends far beyond closing. Most salespersons intuitively understand customer satisfaction. Unfortunately, many registered successful in the sale fall victim to needless financial and related problems simply due to poor organizing and planning. Personal diary. So there are a couple of items that need to be maintained. Personal diary, file records, expert advice, income tax, HST, cash advances, fees, dues and services, and independent contract status. Let's go over them. Personal diary essentially means investing in time management products. File records and set up a systematic filing system for all documents. Expert advice: when customer needs real estate guidance, they seek out registered real estate professionals. When you need financial, investment or taxation counseling, seek out appropriate professionals. It's money well spent. Income tax: don't let tax problems mar otherwise expanding rewarding career. Following guidelines relate to the independent contractors. Make appropriate remittances on timely basis. Get expert advice on expense deductibility. Avoid tax backlog. If taxes are not paid, CRA will issue a requirement to pay to the brokerage. On such notices, the brokerage must remit the money on your behalf out of your future commission received. HST: independent contractors with annual gross revenue exceeding $30,000 must be registered and submit HST collected less input tax credit. Make all scheduled remittances as required. Cash advances: salesperson may require funds in advance of scheduled closing. Third-party companies can provide cash advance services. The salesperson typically assigns all right to the commission in return for immediate payment. Fees, dues and services: by budgeting your new carrier, make set aside funds for initiation fees, annual fees, RECO, registration insurance, monthly board MLS access. IC status: don't compromise your independent contract status. Ensure that all activities and service contract confirm that status. Canada CRA has established criteria that generally aligns with well-documented common law principles for review. And with this, we are done. Thanks. So we can do a small recap here. Title conveyance involves creation of transfer document and stated transfer of rights and interests from one party to another. The buyer solicitor is typically involved in title searches, non-title searches, requisition directly to the seller solicitor, registration and final reporting. The seller solicitor is typically involved in the draft deed, statement of adjustments, adjustment preparation, response to the requisition from the buyer solicitor, registration, and final reporting. A requisition letter typically follows the title search, in which the buyer solicitor addresses problems, defects, or addresses matters under the title. Undertaking are personal assurances given by the clients of solicitor, usually to resolve last-minute issues at closing. E-registration, optional or mandatory, is now available in almost all areas of the province. Title insurance is broadly grouped under loan and owner policies. Loan policy only protect the mortgagor interest, while the owner policies, though narrow in their um, they might have more conditions or protect the entire interest in the property, both mortgage and the equity. Property coverages vary but generally involve unmarketable. Policy coverages vary for the title insurance, but generally involve unmarketability of titles, fraud and forgery, title defects on authenticity of title documents, access problems, and other claims or rights not identified in the title document. Title insurance provides two primary coverages: duty to indemnify and duty to defend. Duty to indemnify means pays for the cost of the loss, and duty to defend pays for the legal expenses. Commission disbursement involves both statutory real estate account and the commission trust account. When seeking employment with a broker, established if a commission trust account is being used for commission disbursement. Maintain accurate and personal records and seek expert advice as necessary. Don't let tax problems spoil a worthwhile career. Adhere to all income and HST requirements. I think we are done now. Thanks for your time. Bye.